Good morning, ladies and gentlemen. I want to welcome everybody to FXTM's week ahead market themes to watch out for. Now, before moving ahead, I want to confirm if everybody can hear me clearly and see my screen. I want to confirm once more if everybody can hear me clearly and can see my screen. Thank you. Okay, perfect. So what we're going to discuss today, we're going to have a light review of the markets last week. Last week was certainly quite eventful for financial markets, and we're going to recap on what's happened last week and how it could impact this trading week. And this is where we move forward to the key themes ahead to look out for in the week ahead. We're going to expect a lot of high-tech economic releases. After we've moved through this, there's going to be a breakdown of the economic calendar, and this will be followed with technical and fundamental setups. At the end of the webinar, we're going to start discussing about the FXTM trading signal. So this is a new part of the webinar that we're introducing. After that, if anybody has any questions, this will be in the Q&A sessions at the end. Thank you. So there was many key themes that happened last week. For one, the dollar again appreciated to its highest level in 2018. Looking at the dollar story, what keeps pushing the dollar higher is a combination of many fundamental factors. We have rising US Treasury yields, positive economic data from the United States, and expectations of the Federal Reserve potentially raising US interest rates another 3 times this year. So these three key factors have actually heavily supported the dollar. Now, when we factor into the fact that the interest rate differentials are actually in favor of the dollar, this continues to support why dollar strength is likely to remain a dominant market theme moving forward. Gold breached below the psychological 1,300 support. So with gold prices, we've been seeing since the start of the year, there's been a strong support at 1,300 and resistance at 1,360. So the fact that gold has actually secured a weekly close below the 1,300 psychological support suggests that bears have won the 4-month-long tug of war. If the dollar continues to strengthen and risk appetite returns, gold is likely to find itself vulnerable to further losses moving forward. Looking at oil prices rallied to multi-year highs. So the driver behind oil trading higher is actually growing optimism over global demand picking up. Yes, well, this fundamental factor has the ability to support oil prices in the near term. I still feel the suspicion that the main driver behind oil's rally is simply geopolitical risk factors, meaning number one, the prospects of the United States imposing fresh sanctions on Iran are likely to impact global supply, and heightened geopolitical tensions in the Middle East could create supply disruptions. So these two fundamental factors could be one of the main reasons why we're seeing oil prices rallying to multi-year highs. So while in the near term, further upside is likely to be on the cards, I think we should always remember that robust production from US shale will always remain a threat to higher oil prices. Looking at the euro story, euro dollar declined to its lowest level in 2018. So two things are driving the euro dollar lower. Number one, of course, it's low inflation concerns. So Inflation in the Eurozone area remains stubbornly low, and this has encouraged investors to push back bets on when the European Central Bank would raise interest rates in 2019. Secondly, we have a heightened political uncertainty in Italy, which has eroded buying sentiment towards the euro. Finally, an appreciating dollar has rubbed salt on the wound. So this is why the euro dollar has actually turned fundamentally bearish. Looking at the US-China trade talks, so one of the key event risks last week was, of course, the second round of high-level trade talks between the United States and China in Washington that started on Thursday and ended on Saturday. The talks ended positively, so both sides have actually vowed to step back on enacting a trade war on each other, so this is quite encouraging. Although China did not give any specifics or numerical values on trade, I still believe ongoing talks between both sides and signs of United States and China probably finding a middle ground on trade could positively impact global sentiment. Now, if global sentiment is positively impacted, stock markets may trade higher, and safe haven assets such as gold and yen could feel the heat. Okay. So before we move on to the next slide, let me just quickly recap. So the dollar appreciated to its highest level in 2018 thanks to rise in US Treasury bond yields, positive US economic data, and expectations of higher US interest rates. Gold has breached below the psychological 1,300 support based on appreciating dollar and rate hike expectations. Oil continues to trade to multi-year highs thanks to geopolitical risk factors. Euro dollar has turned fundamentally bearish, and US-China trade talks round two has ended positively so far. Okay. So the key themes to look out for in the week ahead. So this will be a big week for the British pound. We have the inflation report hearing, CPI, and of course GDP. So we're looking for sterling sensitivity ahead of these key risk events. Yes, if inflation does start to rise and GDP does exceed expectations, this could offer the pound a short-term lifeline. But I think we should always keep in mind that the two key factors which continue to weigh heavily on the British pound is number one, the ongoing Brexit uncertainty, and number two, fading expectations over the Bank of England moving forward with raising UK interest rates. As long as these two key factors hold, the pound is likely to remain depressed for an extended period. Looking at the dollar of course should remain supported by rate hike expectations. The dollar's already traded to this morning, jumped to multi-year highs. As long as expectations remain elevated over higher US interest rates, the dollar is likely to remain heavily supported moving forward. Taking a look at Rick's sentiment, I think Rick's sentiment should be renewed on easing trade war fears. So the positive encouraging outcome over the second round of high-level trade talks between the US and China and Washington should continue easing fears of a trade war, as such is likely to positively impact Rick's sentiment. So we could see global stocks edge higher, and safe haven assets such as gold and yen trade lower. Speaking of gold, as another key theme is that gold should be poised for further punishment. So, as we said earlier, if the dollar continues to appreciate on rate hike expectations and this appetite returns, these two factors should weigh heavily on gold, which is already trading below the 1,300 level. Okay. So let me recap once more before we move forward. Sterling sensitivity ahead of the inflation report hearings, CPI and GDP. Dollar supported by rate hike expectations. Rick's sentiment renewed on easing trade war fears, and gold poised for further punishment. So there's four fundamental trading setups I'll be looking for this week. As we said earlier, the euro dollar remains heavily bearish. So fundamentally, euro weakness, dollar strength should ensure euro dollar to trade lower. Dollar is turning technically and fundamentally bullish based on the factors we've said earlier, rate hike expectations, and the fact that interest rate differentials are in favor of King Dollar. Sterling weakness is likely to remain a key market theme based on Brexit uncertainty and fading UK rate hike expectations. And finally, gold to remain vulnerable to further downside. Okay, so before we discuss technical and fundamental trading setups with the FXTM signals, let's have a light recap of the economic calendar this week. So today is a fairly light day in the markets. The main risk event for the dollar later today will be FOMC member Bostic speaking. Naturally, if he's hawkish, this should support the dollar. On Tuesday, though, Tuesday will be a very important day for the British pound as we have inflation hearing at 9 a.m. Wednesday, we have a array of economic reports. We have RBA government law speaking in Australia. In the morning, CPI figures for the United Kingdom, which are forecasted to actually reach 2.5%. Naturally, a figure above expectations should provide an argument for the Bank of England to move forward with raising UK interest rates. Alternatively, further signs of easing inflation pressures in the United Kingdom should push back bets on higher UK interest rates. On Wednesday, we also have the FOMC meeting minutes, which is a high risk event, naturally for the dollar. If the FOMC minutes are packaged with a hawkish touch and provide fresh insights on how many times the Federal Reserve will move forward with raising US interest rates this year, the dollar could receive a further boost. Thursday, Carney will be speaking, and this will be also very interesting. So Carney will be speaking, and there will be ECB monetary policy meeting accounts later in the day. So naturally, with Carney speaking, if Carney, how could I word this? If Carney expresses caution on the outlook of the UK and fails to provide further insight on UK rate hike timings, naturally this would weigh heavily on the battered pound. And on Friday, Carney will of course be speaking again with Powell at a conference, and we'll naturally, as we said earlier, if these central bankers do provide insight on rate hike timings or monetary policy, this should reflect on the respective currencies. Looking at the pound, on Friday we have second estimate GDP. If UK GDP continues to disappoint, such could heighten concerns over the Brexit negatively impacting the UK economy, and of course this would reduce bets on the Bank of England moving forward with raising UK interest rates. With the pound highly sensitive to monetary policy expectations of the Fed, or diminishing expectations of the Fed raising rates, should weigh heavily on the pound. Okay, so now we've covered the economic calendar. Let's take a look at the technical and fundamental setups this week, and the FXTM intraday trading setups for today and the upcoming trading days. So I have a weekly chart loaded on the euro dollar. So the euro dollar shows how heavily bearish, the weekly chart shows how heavily bearish the euro dollar is. There have been 1, 2, 3, 4, 5, 6 consecutive weeks of declines. Prices, of course, have broken below the initial strong 122 support we were speaking about many weeks back. Previous support at 1.185 is likely to transform into a dynamic resistance that encourages a decline towards 1.17 regions and lower this week. As long as the dollar continues to appreciate and the euro remains gripped by political uncertainty, euro dollar is likely to extend losses this week. We have a chart of the euro of the gold on the weekly. So as you can see on the weekly charts, we have the strong support level at 1,300 and resistance at 1,360. So the fact that gold has secured a solid weekly close below the 1,300 support level suggests that the euro dollar has now officially turned bearish on the weekly charts. Previous support at 1,300 could transform into a dynamic resistance that encourages a decline towards 128 and potentially lower. So with this week, what will impact gold's trajectory naturally will be the dollar's value or the dollar's performance and how markets continue to react to the positive outcome of the US-China trade talks in Washington last week. And a return of risk appetite, which is negative for gold, and appreciating dollar could spell further pain for the zero-yield metal. So this week I'll be paying very close attention to see if gold is able to breach below the 128 support level. Naturally, sustained weakness or breakdown below this level could open a path to 127 and 1268. I have a chart loaded on the pound US dollar weekly. So 4 weeks back, a month back, the pound US dollar was respecting a bullish weekly channel. There were consistently higher highs and higher lows, but we can see the breakdown below the 1375 level has now encouraged a further decline lower towards 134. Now, with the pound US dollar, there's not only an appreciating dollar that continues to weigh heavily on the currency, but the Brexit-related uncertainty and fading expectations over the Bank of England moving forward with raising UK interest rates this year. As long as these two factors hold, pound US dollar is heavily bearish and further downside could be on the cards this week. Already, prices have challenged the 134 level, and naturally a breakdown followed by a daily close below this level could encourage a decline towards 133 and lower. Okay. So now we've covered the fundamental trading setups. Let's use the FXTM trading signals, which can be found on my FXTM, to look at intraday setups that could play out today and in the upcoming trading days. Okay. So those who don't, so for those who are new to the FXTM signals, this is FXTM signals that we provide on my FXTM platform, and the signals are every mornings and afternoons. But I'll be providing live signal updates right now in this webinar. So this is the euro dollar right here. The euro dollar, as we said earlier, it's heavily bearish. It's not only the fundamentals that continue to impact the euro dollar, but the technicals as well. FXTM trading signals on the hourly time frame shows they've been consistently lower lows and lower highs. Prices on the MACD is trading to the downside. So what the FXTM signals are suggesting that is, as long as the euro dollar can keep below the 1.17879 stop loss with the entry at 1.179, the euro dollar has scope to challenge the targets 1, 2, 3, and 4 this day. What I'll be looking or paying very close attention to is if the euro dollar is able to secure a close back below target 2 which could encourage a decline to target 3 and target 4. Okay. Here's the pound US dollar and the hourly. So with the FXTM pound US dollar and hourly shows, of course the pound US dollar is heavily bearish. The entry has actually already been triggered today and the target has already been reached. So for a fresh entry on the pound US dollar, I advise, or apologies, let me reword that, for fresh signals on target 4, if you take a look at the afternoon signals, on the FXTM, my FXTM platform, new signals will be produced. Okay. I've loaded a Euro Yen chart right now, so let's take a very close attention to how the Euro Yen is playing out. The Euro Yen seems to be under pressure on the hourly. What the signals are suggesting right now is, as long as the Euro Yen can keep below the 130.850 stop loss and breaks below the 13232 entry, the targets 1, 2, and 3 have been identified right now. But with the Euro Yen now, as we said, even though the yen is weakened by a return of risk appetite, euro weakness based on political uncertainty in Europe could encourage the euro yen to test the entry at 13023 to trade towards the target 1, 2, and 3. I have a chart loaded on the dollar CAD. So dollar CAD, looking at the dollar CAD and the FXTM signals. So the entry has already been triggered on the dollar CAD today with the entry at 128,643. What the signals is suggesting is, as long as the dollar CAD could keep below the 128,643 level, targets 1, 2, and 3, and 4 could be in sight this trading day. Okay. I've loaded a chart of the pound Swiss franc. So the pound Swiss franc is heavily bearish and hourly, as you can see right here. But as we can see, the entries have already been triggered and target 4 almost in sight. Fresh signals will be provided this afternoon on the MyFXTM trading signals. Let me load one more chart. So we have the dollar yen on the hourly chart right here. So with the dollar yen, looking closely at the dollar yen, the driver behind the dollar yen's incredible appreciation continues to revolve around an appreciating dollar. If the dollar continues to strengthen, Dollar yen has the potential to hit target 3 and 4, but let's see how it plays out. We could probably see a technical correction playing out back towards the entry, which could encourage an incline back towards target 1, 2, 3 and 4 later today. Okay. So, ladies and gentlemen, I want to thank you for attending today's FXTM's webinar, a week ahead. Market themes to watch out for. Now, for those who missed the earlier parts, please be free to watch the post-recorded version on my FXTM. For those who have any questions, please be free to ask me now before the webinar ends. Um, I wish everybody a happy trading session, happy trading week, and I'll see everybody again next week. Um, Moving forward, the FXTM's week ahead webinar timings will be changed. So from next week, the webinars will not be from 9:30 a.m. UK time. At 9:30, the webinars will be moved to 1:30 p.m. UK time. Okay? Thank you very much. Happy trading and see you all next week.